to be quite honest, not much business has been done in lockdown. Let's be honest about it. A lot of people went into lockdown with a pipeline of business, and that either fell away or transacted. But new, fresh stock in terms of real estate sales and real estate financings have been thin on the ground. There's a lot of people now that are looking at transactions and maybe things that have gone into lawyers' hands, but it's the market's been down by certainly more than half. I mean, March and April and May's figures will be non-existent, in my opinion. I haven't seen the May figures yet, but they're going to be April's were very low, 30-40%, I think, of overall transactions. I think May will be even less. But that, you know, when you have a quiet month like that, it always means it's going to bounce back more. So, and also it's the summer months. I think, you know, the weather's been great. People will start getting out there and doing stuff now.
Yeah, I'm not worried about that. I mean, pardon, Paul?
Some new developments have been selling, you know, Regent's Crescent. I've heard of a number of deals there. The Lotus scheme in Grosvenor Square. The big international buyers are out for product. They're not really fazed by this. How do you see supply in the super prime range at the moment? Do you think post-COVID supply will go up of products available if someone's looking to buy a super prime house or apartment, or do you think it will people will sit on their hands and not bother putting it on the market?
It's a good question. I think the super prime market is pretty resilient. I think there'll be less properties. I think it will be, how do I word this? I think it will stay plateau. I don't think there'll be more properties coming to the market. I think what will happen is there'll be more interest to sell. Probably a similar amount of commitment, which will mean there'll be more properties in the grey market that are available, but unless you're speaking to someone who can get you in the door, you won't know about it. So they won't be visible on the internet. That's what's going to happen. I think people will probably, they'll either fall back in love with their home like I have, because I've got a beautiful garden in front of me. I know you can't see it. I'm not going to turn my Mac round, but got a gorgeous garden in front of me. So I'm really, really happy about that. And whilst I might have had itchy feet before, I don't now. But some people might be absolutely bursting at the seams who've been waiting over Brexit for a decision to be made and whether or not Corbyn was going to come into power. And now all of a sudden, Brexit is less of a concern. Let's put it that way. Still a concern, but less of a concern. Because if you made the commitment to be here, you've made the commitment to be here, and Corbyn is no longer a concern. And therefore, now what happens is people have been waiting for the past 4 years. Their family has, you know, maybe exploded in size in terms of you have another kid and the other kid's even bigger now, and you want to move. And so they were bursting at the seams previously. They're probably, you know, everything's pulling away now, and there's going to be that interest in going back into the marketplace. Now, what they choose to buy may have changed. They may focus more on outside space. May focus more on little compound style things, i.e. parking and garaging and security and stuff like that. Now, when it comes to selling, I think everything's just going to get a hell of a lot more personal, because I don't think Paul or Holly or Daniel wants to let 15 different estate agents through the door and 15 different people who they don't know. I think what they were going to want is someone who has some experience and know-how into how to ascertain when someone's legitimate and a good buyer, and therefore only allow one agent or two to show your home.
Totally agree with that. We just sold something as a principal, and it was prime central London. We put it on at the asking price on a Thursday at 4 o'clock last week. By Friday, we had 2 competing bids, went for above asking price. 14-day completion. It's just about to complete. And this was someone who wanted a pied-à-terre in London, and they're going to move to a bigger house in the country, but they want to keep a pied-à-terre in London. But this was a pied-à-terre that ticked all the boxes. A double garage on a £2 million property, very rare, in prime London. Unmodernised. A lot of people like to put their stamp on a property. And this was quite interesting. The competition was between a cash Chinese buyer, money in the bank, lawyer's letter, close immediately, or a aristocratic English family, again cash in the bank, and they actually won the bid in the end. But interesting, people like that, COVID was totally not an issue. They wanted that product. Prime Central London, there's a limit to the sort of product, and there's a big divergence of product in London. You know, from Mews houses to penthouses to pied-à-terres to big family houses. There's a limit to what you can buy. And your point about the agent, we appointed one agent, a specialist in this type of property, and they were fantastic. And they knew who to go to straight away. They didn't want to show 50 people, the old model of some of the newer breed agents, throw enough mud against the wall, hope some of it sticks. What
was the profile of that agent, out of interest, Paul?
Well, it was a Mews house, and they were a specialist Mews agent. So they knew people who wanted this product. They didn't, no disrespect to some of the other more mainstream agents, but you'll have a 2-bedroom flat for sale, and some for 2 million, and you'll have buyers coming around looking for a 1-bed flat for 1 million, and you'd say, well, they would say this is too expensive, and you say, well, why are you here? Why is the agent even showing you this?
I think society changes from stuff like this. We've got short memories. Okay, so I'm having conversations with some of the, you know, they make me look like an absolute turnip, the kind of people that I'm having conversations with, and that I've got the ability to bounce ideas from. And they say to me, I say to them, well, you know, I think this is going to have a big impact. And they say, some say yes, some say no. I think we're going to be reminded of what we're in right now for the next year or two. People are going to be walking around the streets with masks on, right? They're going to have gloves. People are going to be taking their temperature with that temperature gun thing before they go into restaurants. I think this is something that's going to stay with us. I'm not overly concerned. I mean, it's a terrible thing to say. I'm not overly concerned by war, right? I can't see the UK going to war, but I definitely think that if you listen to how the politicians have described the environment we've put ourselves in, and they're saying that we're going to war, we've gone to war with something that we can't see. This is the new age of danger, and I think this will have an impact on people's consideration of what kind of property they do want to buy, and therefore I think it will have an impact on neighbourhoods, because people have gone out onto the press and said values are off, and I'd love to know what Paul thinks of this, but values are off 20%, they'll be off 15%, they'll be off 25%. I think that's absolutely wrong. And the reason why I think that's wrong is that London has become, like a lot of major cities, has become a multitude of microclimates. Okay? If the ownership of most of the properties in Notting Hill is European-based mid-30s, early 40s hedge fund managers, or you know, in the super high net worth position, then they might not have as much as the need to sell as a community in, let's say, Knightsbridge, where there's a lot of Middle Eastern clients who might want to sell. They might have grandfathered in the properties. Yeah, the young kids now are thinking, we want to do our own thing right now. We've got entrepreneurial spirit. It's the digital age. Everyone's got an opportunity. We want to sell the flats that we don't spend much time in, and let's go and cash it out in different businesses and go and invest. Right? Now, that means that there's different microclimates that are taking place. And it's not just nationalities or neighborhoods, it's also asset classes. So it's houses and apartments.
Yeah. Yeah, no, I agree. I also think it's very important to see property as a totally different asset class from stocks and shares. Stocks and shares could go down 50% in a day. Real estate, you still have the three fundamentals of reasons that people sell: death, divorce, tax, maybe financial squeeze. Different reasons why people sell. It's different to a stock, and the scope for wide scale price reductions or indeed increases is much more limited. A 10% reduction or indeed increase is quite substantial for real estate, especially over a 3 or a 6 month period. So I just don't think you will see wild fluctuations. And also, as you say, interest rates are low. Obviously, unemployment is important in the country as a whole. If unemployment goes up 1 million or 2, will definitely affect the sub-million market, but I don't think it'll affect the super prime market. So I think the things that can negatively affect the super prime market, perhaps the stock market, but the stock market's pushing back towards levels pre the COVID crisis, which a lot of people can't understand, but it is. There is a lot of money around. This could be potentially inflationary, the amount of money the government has to borrow to put things back on course. But the government's servicing of their huge debt is going to be very easy. It's something like 30 billion a year of servicing costs, which in the general scheme of things is not substantial. It's not like unaffordable for the government. It's just they've got to spread it out over a period of time.